Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, Washington, D.C. Metro, to Real Estate 360 Live. I am your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. Or via the web at realestate360live.com. That's realestate360live.com. I want to jump into this week's Market Movers. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. You can go to homegain.com today to see what I'm talking about. All you have to do is type in your home address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So when you guys get a chance today, make sure you go there at homegain.com. So I briefly mentioned that obviously the Fed meets on Tuesday, which is probably going to be the big market mover one way or the other. If the language is somewhat just neutral, then it will the rates probably shouldn't shift up or down too much. Also, there is a Treasury will auction $66 billion of notes and bonds beginning today, with $32 billion of three-year notes. So it'll be interesting to see how that auction goes. Outside of that, the bond market has continued to move in a very tight range, with really no particular direction. It goes up a little bit, comes down a little bit. Interest rates have been little changed since October, and it's been in a 15 to 20 basis point range on the 10-year note and a 6 to 10 basis points on the 30-year mortgage. So with the Fed keeping short rates at zero, there is little likelihood that the long end or 30-year fixed mortgages will increase much. But with that said, we still think that we've seen, long-term rates have seen their all-time lows, and any significant move lower is probably unlikely, and just because as long as the economy is continuing to try to recover. So I'm going to reiterate what I say week after week, and if it's for people that keep thinking that, they're going to see the 30-year fixed mortgage at 3%, ultimately you could choose to pay a ton of discount points to get down that low, but I really think that there's more of a risk to not locking in and just securing the already, historically low rates. I just think that it's a very prudent play to do that, and especially, with just knowing that anytime the Fed can throw out something and move the markets one way or the other. Just a good way to protect yourself. I want to jump in now to, I've had a lot of questions from listeners in regards to short sales. And one of the biggest questions that you guys have is, I want to short sale my home. I'm upside down. And can I just short sale it? And the answer to that is no, you can't just short sell your home because you're upside down, because the bank's not going to allow that. You have to... there's two things that have to be in play. You have to be, number one, underwater, where you basically owe more on your property than your house is worth. And then number two, you must have a qualified hardship. Now, the question is, okay, well, qualified hardship, what exactly is that? And what I did was I pretty much gathered a list from probably 5 or 6 different banks of what a qualified hardship would be. One would be that your mortgage rate has adjusted up and your mortgage payment is adjusted up and you're unable to keep up with the new payments. Number two would be a loss of employment or reduction in wages. Number three, a business failure. Number four, a medical hardship. Number five, a death in the family. Number six, a divorce separation. Number seven, a military service. Number eight, an overwhelming debt obligation. And number nine, job relocation. So there's a lot. As you can see, a lot of hardships. And believe it or not, after talking to, many people, we tend to find out what the hardship is within talking with somebody for 10 minutes. It becomes very evident if they're spending more monthly than they're actually bringing in, they have a definite hardship. And in some cases, it's not always the case, but in some cases, we need to refer you out to a bankruptcy attorney. It might make sense at that point to go ahead and wipe out all your debts And obviously, it's important to work with somebody that's going to look at your overall situation and make sure that you're getting the best advice possible. In the DC metro area, and this is actually a national statistic, basically 1 in 3 homeowners. So if you're looking down your street, 1 in 3 people are basically underwater on their mortgage. More and more people are finding themselves, Johnny and Joanne up the street just short saled their home. So I think it's probably acceptable for me to do the same thing. Well, you don't necessarily know their situation. And if you have, $100,000 in the bank and you've got all these other assets, you've got other homes, it might not be the best thing for you to short sell your home because the bank's going to say, well, that's fine. We'll just take and cross collateralize your other properties. So you can't just short sale just because you want to. Lewis, I'm sure you hear of a lot of people. It's become, industry jargon that everybody's like, well, I'll just short sell my home.
Exactly.
Right. And it's not that easy. And people, a lot of real estate agents will take these listings just because, they think that they're going to be able to submit to the bank and they're going to accept it. Well, you need to find out the person's underlying circumstances and make sure that they do have a hardship. And if it's just because they're underwater and they don't want to make their payment, that's not good enough.
Now, Ryan, those hardship rules are from what?
Those hardship rules are basically a compilation of my dealings with many of these banks and kind of, asking them, well, what is a potential hardship that you guys would consider? Okay. So from like GMAC, Bank of America, Wells Fargo, and a list probably of 5 other ones that I've actually put together. They, when they send out initially, the homeowner has to request a short sale packet, right? So when they call up the bank, they're going to say, I have a situation. I don't think I'm going to be able to continue make payments. I've been working with a real estate agent and an attorney that have advised me that I want to move forward with a short sale. They're going to request a short sale packet. So in that, you're going to have to fill out all your financial information and also a detailed letter explaining your hardship. So one of the things that I did, Lewis, was I just asked them, hey, can you give me some sort of list of things that you consider a hardship? And this seems to be the most common hardships that most of the banks are all willing to accept.
What struck me about the list was all of them, other than the first one, dealt with change in personal circumstances. I'm very surprised that they count. The first one was if there's an upward movement in interest rates from your adjustable rate mortgage.
Yep.
That's a market risk that the consumer and the bank took on.
In the very beginning, right?
Right. The other ones are more change in personal circumstances. You lose your job, you relocate, you get a divorce or so on, or you have medical issues. But I'm very surprised, and I'd like to know what your experience is. What are the most used of the hardships?
The most used that I've found lately is just that they're overwhelming debt obligations. Okay, people tend to obviously with rising gas prices, food prices, and everything else, they're not able to have as much disposable income at the end of the month as they were before. So in essence, we're going back through, and then you're able to look in the bank statements and realize that they're not really saving any money. Another instance was if somebody's going to have a kid, right, or they're having another child, that they're having expenses that they're going to incur in the future. That's the other thing that I wanted to note is that the hardship doesn't necessarily have to be taking place right now. It can be in the future. It can be impending. So if you can show where you have $15,000-$20,000 in the bank and you're making every good faith effort to keep up with the mortgage, but it's just not happening and you're depleting your funds, you can actually send this short sale request. Matter of fact, I have a client right now that is in a some sort of a hardship like that where they know 5 months from now that their amount of money that they're going to be bringing in because they have other expenses they're going to incur is going to cause them to not be able to make payments or going to be struggling to make payments. And as long as that adds up according to what the person makes, they're going to want to check your bank statements. You can't hide anything. That's the big thing, and the hardship has to line up with your personal income and assets. If everything makes sense, the banks more often than not want to work these short sales now. They finally have realized that it's beneficial for them to work on the short sale, not have to have a foreclosure take place, which in essence they could lose $50,000 to $60,000 right off the top. So a future problem with income or less money. I mean, really, Lewis, just if you're really just spending more money, I mean, than you were before, that is a legitimate hardship, believe it or not. And I find that's
it is an actual hardship. It's whether somebody's going to allow you to get out of your obligations or to amend your obligations because of that hardship.
And then it goes a little bit deeper because then it depends on what bank you're dealing with, right? So some of the banks are actually waiving the deficiency rights and others aren't. So, but what I typically advise people to do is, you know what, if you're unsure, you can always submit your short sale and without actually physically missing any payments. Now, granted, not all the banks will even start negotiating with you until you've missed a payment. There are a lot of them that if you can show, an impending hardship coming up, in the next couple of months and everything's lining up, then they will negotiate with you. And if you, I've had many's where they get the short sale approved, they never ever physically missed a payment. And if you've been tuning into the show during our credit fix segment, Ronnie always speaks about, there's actually, if you just have a short sale on your credit report, so you finalize the short sale and the bank report settled for less than amount due, that actually does not affect your credit score at all. What affects your credit score is if you miss your mortgage payment. It then rates it as, 30 days late or 60 days late. So you could actually have a 720 credit score, work with the bank to negotiate the short sale, never miss a payment, and keep your credit score to 720 even after it's reported that it was settled for less than amount due. Now that's great, Lewis. You know what I mean? Like that's the win-win situation for everybody.
I suppose you can do the same with a credit card debt.
Correct.
As you're making payments.
Yep.
On time, that's what matters to your credit.
Absolutely. And so, when it's the way they rate the credit, it's, whatever comments are made below, that's not changing the credit score. It's just the actual late payment. So I always tell people the best thing when you're looking to short sell is to try to short sell without missing payments, because then you're not going to affect your credit score at all. Now, will that happen or will that work for everybody? No, it won't. But you are ultimately in a position to see if the bank will accept it that way. And if they will, then you're really going to make out like a bandit. I actually had a client that closed about a month ago. She was about $100,000 upside down. She's looking to relocate and retire within the next year. That was her hardship, so she's been making less money. Actually, the short sale went in. 30 days later, had an approval, waived the deficiency rights. They paid all the real estate commissions, paid for everything, and she didn't have to come to the table with a dime. That was a win-win situation for her. Now, they don't always work out that way. But the best thing that you can do is reach out to a professional that understands these and, aligns themselves with a good CPA and a good real estate attorney to make sure that you're getting the best advice possible. The number is 877-245-2030. That's 877-245-2030. Coming up on a break, when we come back, we're going to let you know if you qualify for the coming FHA refi boom. Stay tuned. You don't want to miss this. Be right back.